Hey guys, what's going on? This is Seth from retipster.com, and today's a special day because I get to give you my 1-year update on how my Fundrise investment has been going over the past year. So if this is your first time here, if you've never seen me talk about Fundrise before, I'll just give you the quick lowdown. Fundrise is one of many different real estate crowdfunding websites that allows investors like you and me to invest their money into not just one property, but pools of property. Say if you are totally invested in the stock market, if all your retirement savings is tied up in that right now, but you kind of want to diversify, put some money into some other things like real estate. However, you don't really have the time, the resources, or the desire to do all the dirty hands-on work yourself. Because let's face it, with most real estate investing strategies, it's like a full-blown business that you have to spend all your time in, and not everybody has the time or the desire to do that. So Fundrise allows pretty much anybody who has at least $500 or more to take the money and throw it into one of their e-REIT funds, which is, again, not just one property, but you're putting your money into a fund that goes out to invest in a lot of different properties around the US. So as with any investment out there, there is no guarantee that you're going to make any particular return. And in the worst case scenario, it's possible to lose all your money in this. However, since Fundrise has existed, they do have a track record of delivering some pretty reasonable returns to people. And this is actually kind of an interesting time because as I record this, we're right in the middle of this COVID-19 coronavirus fiasco. Everything is still shut down as I record this. Most of the country is not operating unless you're an essential service. So it's a really strange time in the history of the world, really. There is no doubt this is going to have an impact on the economy and the real estate market, but it's still just a little early to know, what kind of effect this is going to have on everything. So back in 2017, I took $1,000 of my own money and I invested it into one of these e-REITs with Fundrise. And I recorded the whole thing mainly just to show my audience how the whole process worked and to make them aware of this investment opportunity. After I published that video, I got lots and lots of comments from a ton of people asking, hey, let's get an update. Let's see how that $1,000 investment is performing. So the following year, in 2018, I decided to publish a 1-year update. I did the same thing again in 2019. And here we are now in 2020, and it's that time of year for me to let people know how it's going and what's been happening. So we're going to dive into my account in just a second, and I'll show you exactly what kind of returns I've been getting. And unfortunately, given where we're at in this whole COVID-19 life cycle, I don't think we're going to see a whole lot of impact from that on my dividends just yet. But either way, it's going to be really interesting to see what happens in the next year. I mean, I know pretty much everybody in the real estate investing world is just kind of like sitting and waiting and wondering optimistically what's going to be happening here. And before we dive any further into this, I should let you know I do have an affiliate relationship with Fundrise. Our affiliate link is beneath this video. We earn a really small commission if somebody signs up through that link. And also, just want to be totally clear, this video is not in any way intended to be financial advice. I'm not even saying that Fundrise is a good or a bad investment. I'm not even saying that I like or dislike Fundrise. This is purely my real world results, so you can see exactly how my investment has performed. You can also see how the website works. And just take this into consideration. If you are thinking about getting into Fundrise, you can at least see what I'm able to see, and you can use that to make your own decision. And I'll also say I've gotten a lot of comments over the past year in particular from people asking some really good questions. Like, for example, when you put your money into a Fundrise e-REIT, this is real estate, and real estate is a highly illiquid type of asset. It's not the kind of thing where you can just snap your fingers and get your cash back tomorrow. Fundrise basically tells you that when you put your money into this investment, you should plan to have it tied up for at least 5 years. And it's not necessarily impossible to get your money back prior to that, but it's also not guaranteed that you can. They tell you to wait at least 5 years. And if you do try to request it prior to that, even if they're able to do it, there are certain penalties that go into place when that happens. So that's one interesting thing just to be aware of. And then also, some other people were wondering about, what happens when you have your dividends automatically reinvested? Because that's what I have been doing in my account. Like when I get a dividend each quarter, I don't tell them to put it in my bank account. I just say, hey, take the money and put it back into another fund and let's keep it growing. And some people were wondering, so for each of those additional investments that you put back in from your dividends, does that go by the original 5-year timeline, or does that then start a new 5-year timeline, so you have to wait 5 years after each one of those additional investments? I actually asked Fundrise about that, and they responded and said, yes, that starts a brand new 5-year timeline. So that's just another important thing to keep in mind. If you do choose to have your dividends reinvested, you're tying up all of those for 5 years out from the date that it's reinvested. So with that out of the way, let's jump into it. I'll show you what my account looks like. Hopefully you'll find it interesting. Okay, so this is my account. As you can see right up here in the upper left-hand corner, over the past 36 months, this investment has returned $376.57 from the original $1,000 investment. You can see this little chart here that kind of shows the growth ever since this whole thing started. And then this right here breaks down the dividends and then the appreciation, minus the advisory fees that were incurred along the way. Pretty straightforward, pretty easy to understand, but let's dive a little bit deeper into this. So first of all, let's go over here to transactions, and right here we can see a ledger showing all of the dividends that were generated and then also automatically reinvested since I started this back in March of 2017. It just shows all of those historical numbers there. And again, I haven't seen any of this money because I just tell them to put it right back in there. You can also see how these investments are broken out. So 52% of my portfolio is tied up in debt deals. So basically the money was used and lent out to other real estate developers. And then as that money is paid back, this fund earns interest income from that. And the other 48% is allocated towards equity deals, which means the money is actually tied up in the ownership of those properties. And those properties make money when they are fixed up and then resold at a higher price, and or as the properties earn rent income along the way. So that's how that portion of the portfolio is making money. You can also see that my invested dollars are broken up into 213 different active projects. You can see a little scatter graph here where you can, select any one of these things and see more information on each one. If you want to do that, you can also click view details and see like a full write-up on each one. And you can do that for literally all of these if you want to do that. So it's kind of cool that that information is presented so nicely and is just readily available. And then something else we can do is go over here to portfolio, and we can see all the different E-REITs that my money has been reinvested into. So if you did happen to catch the original video I did way back in 2017, I'll link to that beneath this video, by the way, in case you want to check it out. But originally, I put my $1,000 investment into this East Coast E-REIT, and that's really the only time I ever told Fundrise where to put the money. But as the dividends were automatically reinvested, they kind of like split those up among a lot of other E-REITs that I never told them to do that. They just did it. I had the same question last year. I'm not sure exactly how they make that decision or how they decide where that money ought to go, but kind of just trusting them to know what's best and to do their job as the manager of these funds. That's also worth noting as we talk about this. Whenever you invest in something like Fundrise, you're trusting that fund manager to do their job and to put the money where it ought to be and earn the best possible return. So this is not the kind of thing you want to do if you want to have a tight rein on what's happening with this money. This is the kind of thing you do if you don't want to think about it. You want the money to just sit there and increase in value, hopefully, assuming the fund managers do their job here at Fundrise. So this is definitely the laid back approach to real estate investing. And as a result, your returns are not going to be nearly as good as they could be if you were willing to run an actual real estate investing business. If you are happy to do a lot of the hands-on work, you can do much, much better with your money, but that also requires a ton of time and risk on your part. So it's one of those things where you kind of pick your battles, which ones you want to fight, and then what kind of returns you want to get. Now, if we scroll down here, we can also see a quick summary of all the different projects. Again, if we want to click on those and check them out, we can. Something else we can go check out here is performance. And when we go to performance, we can see the returns that each one of these funds that I'm invested into has earned on a quarter by quarter basis. And as we scroll down here further, so this is kind of interesting. This shows what the annual return has been each year. We can click on this and see them all from 2017 all the way to 2020 year to date, which is when I'm recording this video. And you'll notice like it's done pretty well actually, 8% and then higher to 11.4, 12.3 in 2019. And year to date when it says 1.1%, the reason that number is so low right now is because we're not even 4 months into 2020 yet as we record this, so it doesn't have the full year to account for. Again, with the whole coronavirus COVID-19 thing, I think pretty much every prudent investor or business owner is planning to take some kind of hit if they haven't already taken a giant hit as a result of this. And that's actually the interesting thing about this particular recession that we're likely heading into is that, back in 2008, that recession was very much caused by like banking institutions and bad real estate deals and that kind of thing. That's not at all the cause of this recession. And frankly, just this whole crisis is not something the world has ever seen before. So like there's a lot of question marks in terms of where this is going to go and what this is going to mean. But I know, like, just in general, with any recession, if we know that real estate values are going to plummet at any point in the near future, that's obviously not a good thing for anybody who currently owns property and is trying to sell that. However, at the same time, it's a great thing for somebody who has liquidity and they're about to purchase property because they're going to get an amazing deal. So while this could certainly have a negative impact on the properties that Fundrise is trying to sell and get out of, it could just as well have an amazing impact on new acquisitions that they're looking at. So I don't know, it could be the kind of thing where like the net result is negative, or it might level itself out, or people could honestly come out ahead depending on what opportunities Fundrise is able to get into and purchase if and when real estate values plummet in the short term. So it's anybody's guess in terms of what could happen. Just speaking for myself, so it has never been my plan to like throw all of my eggs in this particular basket, mainly because I don't have really any control over it and the returns aren't nearly as good as what I could get if I were to buy my own properties. So that's why I'm not going to like throw a ton of money at this. But I mean, if I was looking for this kind of a REIT, I mean, I don't want to totally dismiss this kind of thing because I know there's certainly going to be opportunities that come out of this whole crisis. And if these guys are smart with which properties they're buying and what their strategy is going forward, they could have a lot of amazing opportunities that they haven't had in the past couple of years. So time will tell where this ends up going. And when I record this again in 2021, we'll have a lot more insight on that. So be sure to tune in again next year when I do this. It'll be pretty interesting to see that. Then over here you can see another one of these graphs showing the account value over time and where that's gone. And you can also see this in dollars rather than just percentage points if you want to see the actual amount of money that has been earned each year. So you can see with the dividends reinvested and the appreciation combined together, it just gets higher and higher each year. It's kind of cool to see that. If only I had invested $100,000 back in 2017, we could add a couple zeros on each one of these numbers. So as I mentioned earlier in this video, there have been at least a handful of comments on previous videos of people wondering, or just for lack of a better word, complaining about the fact that they can't get their, an original investment back until 5 years after it's in there. On one hand, I understand that 5 years is kind of a long time to have your money tied up and totally inaccessible. On the other hand, that's not that unusual for real estate. Most people plan on owning properties like this for a fairly long-term investing strategy anyway. So I think if you want your money back sooner than that, then don't do Fundrise. Stick to the stock market where it's a lot more liquid and potentially a lot more volatile. But with that said, I also want to let you know it is technically possible to submit a redemption request prior to that 5-year deadline. And this page right here on the site is where you can go to do that. And I actually got this link from Fundrise because I asked them this specific question, so they sent me here. And it basically just strongly advises against it, first of all, because that frankly shouldn't be your plan in the first place if you're doing this. However, I understand that sometimes stuff just happens and you just need to grab all the liquidity you possibly can. So if you're in that situation for whatever reason, it is possible to at least ask for it, but it doesn't mean they have to give it to you. And it's possible they might just say, nope, sorry, we can't do it. But this is the page where you can go to do that. And it kind of gives you these warnings right off the bat saying redemptions may be taxable and early redemption penalties may apply. So if you're okay with all that stuff, just acknowledge it and continue. And then you can just say right here whether you want to redeem your entire account or redeem a portion of your account. And there are penalties that do apply, as you can see explained right here. And if you do send in this redemption request after the 5-year timeline, then as you can see, there is no penalty at all. So just so you know, that may be an option, not guaranteed, but it's a possible backdoor if you happen to fall into that situation. Even so, though, if you think you're going to need that, then again, it's really a better policy to only invest money here if you're very, very sure you're not going to need it within the next 5 years. So that pretty much sums it up. That's really all I have to show you here. As you can see, it's still going pretty strong. I got my fingers crossed. And again, assuming that I'm still alive and the world is still turning, I'll plan on doing another one of these reviews in 2021. And I can show you what's been happening since then. So I'm probably just as interested as you are to see what's going to happen in the coming month and how that's going to affect this particular investment and really real estate as a whole. So I hope you and your family and your loved ones are safe and healthy. Stay well, and I'll talk to you next time.